Hi and welcome to the business edition of PM Express. My name is Philip Nanfuri, and tonight we're going to be talking about the State of the Nation address. Yes, you guessed right. But we'll narrow in on the economic part of the discussion. Yes, His Excellency the President of the Republic of Ghana, President Nana Addo Dankwa Akufo-Addo, was on the floor of Parliament today in line with Article 67 of the 1992 Constitution to give us an update on the state of the Ghanaian economy. He touched on several areas: sanitation, education, health, and security, very important part. But as part of that, he spoke about the economy. He looked at different parts of the economy. The banking sector was touched on. The IMF program was also touched on. Inflation, interest rates, and all the other economic fundamentals that show how an economy is performing. He also looked at the entrepreneurial finance space and SMEs and how they'll benefit from financing and stuff like that. So all in all, yes, the state of the nation, from the president's perspective, is strong, is good. But tonight we're going to look at some sectors. We'll look at the general economic performance. We'll move on to the banking sector. We'll look at a bit of housing. What did the president have to say about the 1 billion that's going to be made available for affordable housing, so that low-income earners can access mortgages to buy their dream homes. And we'll look at the IMF. We'll hear what the finance minister has to say. So we'll take a quick break, and then when we get back, we'll start the conversations.
Mr. Speaker, production in the economy as measured by real GDP growth has picked up very strongly in the last 2 years. From 3.4% in 2016, real GDP growth increased to 8.1% in 2017. In 2018, provisional data for the first 3 quarters indicate a strong real GDP growth of 6%, higher than the annual target of 5.6%. Real GDP growth for 2019 is forecast at 7.6%. Ghana's recent GDP growth has placed it among the highest in the world. The fiscal deficit is being brought down from the 7.3% of rebased GDP in 2016 to a provisional 3.9% of GDP at the end of 2018. The debt to GDP ratio has declined from the 56.6% of GDP in 2016 to 54.8% at the end of 2018. Inflation has dropped from 15.4% at the end of 2016 to 9.9% in January this year, the lowest in 6 years, as announced by the Ghana Statistical Service last week. Interest rates are declining, and so is the Bank of Ghana monetary policy rate. Our trade balance account, for the first time in more than a decade, recorded a surplus in 2017 and is expected to remain in surplus. In May 2018, a $2 billion Eurobond was issued for 30 and 10 years of $1 billion each, with coupon rates of 8.62% and 7.62% respectively. And these were the lowest rates and the longest maturity in our history, signifying confidence in the economy. It comes as no surprise, therefore, that today Ghana is the leading recipient of foreign direct investment in West Africa. Mr. Speaker, these are good figures. And as we prepare to exit from the IMF program in April, we expect impressive figures and good performance to continue. We are very much aware that this is not the first time we have had such a good set of figures, but we're determined to do things differently this time around. We have imposed on ourselves fiscal discipline, we're paying off legacy debts, and deepening good governance practice, and business confidence is growing. We will maintain the discipline and bring progress to our country. We've decided to institute a legal framework to help with the discipline. We've passed the Fiscal Responsibility Law, Act 982, capping the deficit at 5% by law. And some 2 weeks ago, I inaugurated the Presidential Fiscal Responsibility Advisory Council, chaired by the eminent respected economist, Dr. Paul Akwa, former governor of the Bank of Ghana and former deputy director of the Africa Department of the IMF, with some of the finest and most reputable economists of our country as members. Its purpose is to advise the President on relevant additional measures needed to maintain fiscal discipline. We have done this because we know the temptation to go on a spending binge will always be there. We know election years will come around and there will be pressure on government to splurge, and persuasive arguments will be made that you have to stay in government to be able to implement your programs. However, I am bent on running a responsible administration, mindful of the next generation and not.
So that was the President, Nana Addo Dankwa Akufo-Addo, speaking to us just today, earlier on in the day at the State of the Nation's address on the macroeconomic fundamentals. One key thing he says here is we need to sustain this over a long period of time, no doubt. Without that, all we'll be doing will be an exercise in futility. But I'm here tonight with Nana Otue Champon. He's a banking consultant, and he's going to help me walk through all this. General economic performance, the banking parts, and we'll have a very great discussion. Nana is obviously well known in this space when it comes to economics, finance, banking especially, and he's a friend to the media. Nana, thank you very much for joining us on PM Express. So, general economic performance. I mean, if you look at the fundamentals, interest rates trending downwards, monetary policy at the last meeting cut by 100 basis points, inflation 6-year low, 9%. One would argue we can have a party, can't we?
Sure we can, because the important thing here is that the State of the Nation address is supposed to give us an account of what the government in power has fed in since they've been 2 years. And so going through all these achievements, I think it's not any small feat, especially on inflation, which has a link with wages and salaries. Yes. It's down inflation from 15.4% to 9% within 2 years is a sizable feat. Then you go on interest rate, which were in also upwards of 30%. Now it's come as low as 16% for the MPC rate. Although the transmission rate has not been as fast as expected. And
then that's the sticky point for everybody. Everybody complains about that.
One would have thought that, bringing it down to as low as 16%, we will get a similar downward trend in the bank's lending rate. Yeah. But normally the rate of transmission is slower when it's moving southwards than when it's moving northwards. If it had been the other way around, you bet that the following day the banks will be charging this thing. And that's because of the way that the interest rate is calculated for the banks. The factors that go in include some fixed costs, which is not so easy to change in the short term. So, generally the economy was given has been doing well, but the bottom line is people want to know what's in my pocket.
My pocket. The president talks about the Fiscal Stability Council, and then we've passed the Fiscal Responsibility Law. We've capped our deficit at 5%. So if we go overboard, there's trouble for whoever took us overboard, I will assume. One would say Ghana is a country with fine laws, fine institutions, but when it comes to implementation, we don't seem to do it. So somebody will say, okay, right now there's a Fiscal Stability Council supposed to advise the president on these matters, checking revenue expenditure. But somebody will argue it won't hold water. Would you share that argument?
Well, I wouldn't, especially given the fact that it is being chaired by somebody who is on record to have bounced government checks. When Paul Akwa was the governor of the central bank, if government didn't have money and they drew a check, he returned it and said, you know, put money in before I honor it. So I think he's got that braveness to be able to keep it a check. Now, and the difference is this time around, a law has been passed.
Okay.
And the history of the law was that proposed by the IMF that, look, you've got to discipline yourself and make sure that you live within your means, because fiscal means your income and your expenditure. That why should your expenditure always exceed your income? Try and maintain it at a level that is within your income. So the IMF was even asking for 0. And then Ghana started by saying, oh, why 0? If you give that 10%, you know. So in the end, the MPs argued and they settled on 5%, which is better than 0 anyway. So now they need to keep within that. And I've got every confidence in the chairman of the council, there's Dr. Paul Akwa, that he'll be able to keep that discipline going. So though we may have had some experiences in other parts of implementation, but this time around, I'm hopeful that he'll be able to keep the government on his toes.
Okay, so for you, it will be a good point. I mean, it's a good move, if I can put it that way, this fiscal council.
Yeah.
Nana, how, with where we are heading right now, or where we've come from, given this government's assumption of office in 2017, January 7 till date, do you think, on the surface of what we've seen, the different fundamentals, monetary policy, fiscals, interest rates, inflation, do you think we are heading in the right trajectory?
There is no doubt about that, because what else do you expect if you are having these sort of statistics? You know, your inflation is going down, your interest rate is going down, your deficit is going down, you are now in a surplus. Yeah, Ghana has been there before, but it's been a long time, about 10 years ago, you know. So I think these are all when you talk about economic fundamentals, these are some of the statistics that we look up to. And since they are all moving in the southwest direction, I feel that we are on the right track.
Okay, we will talk about the IMF later on, but I want to just bring this in because it's part of the economic discussion. The president says we've been to the IMF 17 times so far. If you check the lending arrangements we've had with the IMF, true, we've been there a lot of times. And it seems the same sticky problems take us back. Election-related overspending, commodity crashes, etc. Do you think that post this IMF program, which I hope and pray will have a successful review, post this IMF program, we will have the discipline to move ahead and not go back immediately?
Okay. Yes, 17 times, but we are not alone. Even Britain has been to IMF, you know. Now, this time around, we are doing it with the backing of the law.
Okay.
And the law is specific. There are very serious sanctions if they try to flout the law. And with the kind of hope that we have in the person who is chairing this council to ensure that the government is disciplined, call them the policeman, to make sure that, you know, they toe the line. I think it will work, and if it works, it will be very good. It should work. Yeah.
Okay. This is the business edition of PM Express. My name is Philip Nanfuru, and my guest, Nana Otuo-Champon, is a banking consultant. We'll take a quick break. When we get back, we'll look at the banking sector issues specifically. What do we have to learn there? Thanks for staying with us. My name is Philip Nanfuru, and this is the business edition of PM Express. Before I went to the break, we're looking at the general economic performance, inflation, interest rates, IMF, etc. We're moving on to the banking sector specifically. That's Nana's backyard. He plays there, he drinks there, he sleeps there. He talks and he walks banking. The president made mention of the fact that, you know what, it pushed our debt up a bit. A bit would be an understatement, some would argue. About 12 billion Ghana cedis. Fortunately, we had a GDP rebasing that saw the debt to GDP ratio drop. But all in all, the absolute figure of our debt is still high. Let's listen to what the president had to say with regards to the banking sector. Then Nana and I will have a discussion on that.
The Speaker, the incidence of bad government methods that almost collapsed Maslow has unfortunately affected the running of many businesses generally, and the financial sector in particular. The banking sector has gone through what can only be described as a traumatic upheaval. Again, Mr. Speaker, the woes of the banking sector have also been a case of long-standing bad practices that was previously had been able to deal with, which we're now having to deal with in the most painful manner. The cleanup has cost the National Treasury 12.7 billion cedis, money we can ill afford, but which was necessary to sanitize the sector, minimize job losses, and protect deposits of 1,147,336 Ghanaians and their businesses and the people they employed. The banking sector has emerged stronger from these developments, has begun to re-inspire confidence in this. In all this, I've been anxious that our local banks are helped and given as much support as possible, which has been done. But I'll not be on the side of criminal behavior if that is discovered. I would urge that we are all patient for the investigations to be made in a calm manner. Again, while I'm on the subject of rogue activities in the banking sector, this is probably the time to mention the men's gold debacle. This is a tragic phenomenon that appears to have occurred in plain sight and affected a lot of people in spite of warnings from official institutions. As the authorities try to unravel the intricacies of what happened, I admonish all Ghanaians to learn the necessary lessons for the future, even as state institutions work to bring a resolution to the matter, and those who are seen to have indulged in criminal activities are brought to justice. Last week, I inaugurated the Presidential Financial Stability Advisory Council, an interinstitutional consultative coordination body which groups together all the regulators of our financial system and whose purpose is to advise the President on the measures to be taken to preserve the stability of the financial system. The existence of such a body would have forestalled the emergence of the men's gold saga and will make it difficult in future for any such scheme to get off the ground.
And that again was the first gentleman of the land, President Nana Addo Dankwa Akufo-Addo, speaking about the banking sector and key issues here. One, the cost, 12.7 billion Ghana cedis, very high. Look, it cost us a lot. That's the explicit financial cost. You know, the implicit cost, the trauma that people had to go through, people who lost their jobs, people who were scared of losing their deposits. It's not an easy thing to wake up in the morning and hear that your bank has collapsed. You start wondering, will I get my money back, my children's school fees, and everything. Another thing he mentions is the Financial Stability Advisory Council. So the four regulators, that's the Bank of Ghana for the banking and non-banking sector, the National Insurance Commission for insurance, the National Pensions Regulatory Authority for the pensions, and we have the Securities and Exchange Commission for the capital markets. Bringing them together, they're going to advise the president so that issues like men's gold and other things, because you know some of the banking issues, you have a bank that's playing in the banking space, has an offshoot or a subsidiary in this space, and funds were commingled and mixed up and the issues came up. So if this inter-institution body comes together, would that be the solution? Nana? Would that be a solution to some of the challenges we see in the financial services sector?
I hope so. I hope so. The only thing is the informal system has been there where the four regulators within the same sector were supposed to communicate with each other. But that was an informal one. So now it's been formalized into this council. And as you can see from the members, it's one from each of the four. You rightly set it out, because sometimes when you talk of the financial system, many people think it's only the banking system.
The bank's true,
yes.
Very true.
You've got the capital markets, you've got the insurance, and then the latest kid on the block is the pensions. You know, so all four together. Now, the representatives on this council will therefore ensure that they talk to each other. And if they talk to each other, instead of living in fiefdoms, then you cannot play one against the other. Because if you take Men's Gold, for instance, initially it was to be caught by the Deposit Taking Institutions Act, because they were alleged to have been taking deposits. And then quickly they changed to sell collectibles, which is some investment. And so they moved from being under BOG to becoming under SEC. Now, if the council has been there, then it would not have been that easy to make that move. So I think those are some of the things that we need to, and especially now that we have bank assurance, where banks are giving insurance, or they are also linking up with insurance companies. It also means that we need a system to be able to make sure that we know what each of them is doing. So this Financial Stability Advisory Council is a good move, and although theirs is not backed by law as the fiscal one, but still they will have some, because they are advisory. I hope that they will be able to give the right advice and ensure that we don't get people getting through the system as Men's Gold did.
Okay, now two questions here. One obvious one: do you think this should also be backed by law, like we see with the fiscal, or we should have a sort of dry run to see how effective it is before we put this in law?
And then the latter. Let's have a trial period, a year or two, and then if we still see that people are slipping through, then we could back it by law. But as it stands now,
no. Okay.
Okay.
Second one has to do with the Twin Peaks regulatory model practice somewhere in South Africa, or in South Africa. Some would argue that this also looks into the loopholes that exist between different regulators. Is Ghana's economy ready to take such an approach in financial services regulation?
Okay, I'm not too familiar with the South African one, but familiar with the UK one, where for the financial services sector, we have the Bank of England looking after the prudential, and then the Financial Conduct Authority
FCA,
looking after the rest, because they came to replace the FSA. You had the Financial Services Authority, and now they collapsed that and said, no, banking should be strictly regulated by the banking regulator, which is the central bank. So if we are to have a similar thing here, where we have the prudential one under Bank of Ghana, and then the financial conduct under another council, regulating all the rest, it will be a better model than what we have now, because at the moment we have Bank of Ghana doing the two activities, and then each of the other three also doing their own. But in the financial services, they are all in one industry, and therefore it will be good to put the Financial Conduct Authority, or at least the UK model type, where you have the Financial Conduct Authority looking after all of them, and then for the prudential returns, the Bank of Ghana will deal with that.
Now, just for education to viewers and listeners out there, and for myself, I would assume that the prudential refers to the numbers that would deal with the hard stuff, and then the financial conduct will deal with more of the customers and how they engage or interface with the institution.
That's right.
Is that right?
Yeah.
Okay, so well and good. So if you hear prudential regulation, it's got to do with the hard numbers. How are their balance sheets looking like? Their liquidity, their solvency, etc. When we talk about the financial conduct, how are you and I, customers, interfacing or relating with the banking institutions or the banks at large? There was also another point that the president mentioned. He will not condone any wrongdoing that has gone down in this banking sector debacle, and we should be patient and allow the investigations to take place. Nana, you are very familiar with practice elsewhere, banking practice elsewhere. What are the types of punishments, if I can put it that way, go to people who are found in such situations, and what does our banking law say in the Ghanaian regard?
Well, the infraction could be either civil or criminal. the case we have in question is Enron. When the banks assisted in them duping customers and so on. In the end, it was a civil suit filed for $2 billion, which was paid by almost all the banks that were involved. Because usually in financial issues, it's difficult to prove the criminal liability in the sense that with crime you have to satisfy on two fronts, isn't it? That he had the intention to really commit, and then he did an action which committed. The lawyers will tell you. So yes, criminal liability is there, and at the moment we've been assured not only by the president but by the body in charge of the banking regulation, which is Bank of Ghana, that anyone found culpable, they will deal with the law. And Yoko has also confirmed that they have interviewed quite a number of them. So I think we just have to exercise some patience. In the case of Enron, it's only a year or two ago that the last case was handled. Yes,
that's a long time.
There's 201, so it does take some time. So I think we should have patience. Yeah.
Okay. Before I come to the cost of this whole cleanup, some have argued that we should call it a reform. That cleanup spreads fear and panic. I don't know what to think about that, but with regards to settling everybody that's involved in this from the receiver's side, we heard Bank of Ghana saying that on purely humanitarian grounds, they were going to give some of what they are owed to some of these workers. In order of how this is settled, in terms of, so let's use UT and Capital under receivership. Who do they have to pay off first, and who gets money last?
Well, normally the secured creditors will get paid first, and then after that, well, if the taxman gets paid first.
So in this case, that would be the Revenue Authority.
Yes. Then the secured creditors, then they'll move to the unsecured. Unfortunately, the staff will come under unsecured.
Okay.
And yes, just as the government spent 12.7 billion saving some 1.14 million customers, I think the staff should have been added to that figure, and they also helped as well.
Yeah. Okay, so if you look at the cost, the explicit cost, it was about 12.7 billion Ghana cedis. And just as the numbers part, like I said initially, the implicit cost of it. Nana is arguing that, the staff should have been fed with something, to help them out, because obviously they were part and parcel of the brand and the growth of these banks. And when you go to a financial institution, you would work really hard. The targets are tough, the hours are long. So obviously, if you had put the staff into this, that's why I'm sure Bank of Ghana said we're going to help these staff members on purely humanitarian grounds. I'll come to Nana again. Nana, the cost part of it, the 12.7 billion, this is just the cost in terms of numbers.
Yeah.
The implicit cost is rarely counted. Just share with us some of what people will go through, because I just can't imagine if I was told today that my bank, where my salary has been passing through, everything might be going down or has a problem.
Well, I think you will call it psychological cost, in the sense that mentally it will affect quite a number of people. In cases where you had a whole family working in the sector, you had like the father in one bank, the mother in another bank, one or two children in other banks. So the whole household in the sector, and then they get up one morning and it's all gone. Psychologically, you become very, very unstable. And in other jurisdictions, you would have engaged some psychologists to, mentor them to get through the pain. At the moment, I'm not sure if anything of that sort was done for any of the staff, but it's something that you should look at to help the staff to get over this trauma, because it was very traumatizing. And this day and age, the young staff go into banking, and then because banking is taking money and giving out loans, they immediately go into taking loans. Mm-hmm. So most of them, their salary that goes into their pocket is about 20-30% of their gross, and the rest is all used to pay loans. To pay off their loans. Now, therefore, their saving culture is not there, and so it's very traumatizing.
Okay.
Yes, very traumatizing.
Okay. So at this juncture, we will be moving on to the next stage of our conversation. We're looking at the housing market or the mortgage market. Some 1 billion coming for low-income earners. I mean, if you want to buy that dream home, you'll be looking forward to this money. I mean, people always talk about how mortgages are crippling their accounts, because as soon as your salary hits and you're on a direct debit, boom, goes away to the mortgagor. And Ghana Home Loans arguably was one of the biggest, if I can say so, mortgage lenders. Now we are hearing that they are going to be merged with First National Bank or acquired by First National Bank. So we'll take what the president had to say on the housing market, mortgage, etc. Then we'll take a break. When we get back, we'll have the conversation going.
Mr. Speaker, when we're dealing with matters of good health, we must necessarily move on to shelter and housing. There is an acute shortage of user-friendly, decent housing for people in middle and low-income brackets in our country. This is a long-standing problem that gets worse with each passing day. It is time to tackle the issue and find a resolution. We're starting with the completion of the many abundant projects dotted around the country. A consortium of local banks has raised $51 million to fund the completion of the social housing units started by the Kufuor administration in 2006 at Koforidua, Tamale, and Ho. The Saglemi housing project, started under the last NDC government, is also high on our list of priorities this year. The 5,000 units it offers would boost our housing numbers. We're therefore establishing the value for money issues surrounding the project in order to reconcile the number of houses built with the schedule of payments made and accelerate delivery. The 2019 budget made provision for the construction of 200,000 housing units and a database of local and foreign developers that has been created to help make this policy a reality. Land banks have also been secured in several towns across Ghana, where factories producing prefabricated building materials can be cited for this huge construction effort. There are many well-intentioned projects that ended up pricing out the low-income earners who are supposed to be their beneficiaries. We're determined to learn the lessons from past projects. The Ministry of Finance is working to launch a 1 billion Ghana cedi housing fund that would target low-income earners. Mr. Speaker, government will continue with the other housing projects for the police, armed forces, and government workers across the country through agencies like the State Housing Corporation. The most exciting news on the housing landscape, though, is the drafting of Plan to Generate NEMA, which holds the dubious title of being Accra's first slum. It has, of course, progressed very much since those early days, even if it has been unable to shake off the urban slum title. I'm a proud resident of NEMA myself. And I'm extremely excited that the regeneration plans will not dislodge or dispossess residents, but rather transform NEMA into a well-laid-out residential area with full amenities. I'm looking forward to it. Good work that is being done by the Ministries of Inner City and Zongo Development and Works and Housing.
So that was the President, Nana Addo Dankwa Akufo-Addo, speaking about a 1 billion fund for mortgages to be targeted at low-income earners. I mean, that's on the public side. So that's, you might call it a public-private partnership, because he mentioned a consortium of local banks trying to help in completion of some of their housing projects. But now the key question remains, and it's always been the case. If you look at most of the banks in Ghana, they're not very heavy on mortgage lending. Why? The argument is that it requires long-term funding, which most of them cannot get because of the structural issues within the economy. Is that the case? We'll find out. Let's take a quick break. This is PM Express, the business edition. My name is Philip Nanfuri. Thanks for staying with us. This is the business edition of PM Express. My name is Philip Nanfuri. My guest, Nana Oto Champon, he's a banking consultant. Just before we went on the break, I was talking about the challenges we have in our mortgage market. I mean, access to long-term, I'm talking about 10, 15 years plus of funding. They say our banks are used to short-term lending. Is that really the case? Nana is about to tell us. Nana?
Is this really the case?
Is the case?
Because the sort of retail banking that we have here take short-term deposits, and therefore you can only lend short-term as well. So to get access to long-term deposits, that's when you can lend long-term.
Okay.
And in most cases, it's through the pension system, and then institutions like SNET. They get long-term funds.
I have to chip this in here because you mentioned pension funds. Look, this argument is sound. The world over, you rightly know that most of these developed economies have done so on the back of life insurance and pension funds.
Yeah.
But now we're trying to even channel pension funds into some banks. Yes, some are arguing that these banks are not very strong. So then because anytime there's a mention of the use of pension funds for something, there's an uproar. How do we balance this?
Well, it's a cause for education. Cause for education for people to understand. Because after all, the pension, assuming somebody starts work at the age of 30, which is advanced, but 25, 30.
Yeah.
Now it's going to work all the way to 60. So if they start making a pension contribution, ideally they're not going to draw on it for another 25, 30 years. So that is a sort of funding that if banks get access to, then they can on-lend for mortgages on a long-term basis. But right now, they don't get access to that because of the way that the pension system has been set up. The improvement that came in, I think, the tail end of Kufuor's admin, was supposed to correct that. But it is still going through to have the tier 1, tier 2, tier 3. If they get to work better, then we should be able to get some long-term finance available to the banks. You rightly said that GAT was intending to use a pension fund.
Exactly.
But because of some lack of education, they weren't able to get the opportunity to educate the pension holders, long enough. And they thought, so you are going to take my money and put it in a bank which in about 2-3 years' time, they will squander it and you collapse it, and then I'll go on pension and there's nothing for me to take. So it's understandable. I think if we educate the public in the right way about the need to have long-term investment, because we're going to put in equities, and equities are supposed to be long-term investment. But if the market you are putting in is not a very liquid market, again, that also causes a problem. So with the mortgage, if some banks have been able to put together $51 million to support the market, then it's a welcoming news, and they should be able to assist to get people into affordable houses.
This initiative coming from the public side of things, obviously with some private funding, it's fantastic. It's going to help. But then, do you think that going forward, the private sector rather should be leading the charges on this rather than the other way around?
Oh yeah, in the long term, it should be. But on the other hand, if this is facility for workers, the biggest employer is government, and therefore it works on that basis. And so if you are going to use pension funds and they are the contributors, then they should benefit by more or less taking their pension upfront because they get the benefit of using it to buy properties that they will live in until their pension age. And by the time they get to pension age, they'll have paid off the mortgage anyway. So I think it calls for just education of the public here.
Okay. At this point, we want to hear from the finance minister on the IMF program. He spoke to my colleague George Rafe after the State of the Nation address. We are in February. The program is supposed to end technically in April 2019. But obviously, we can't complete this program without the review of the IMF's board. They'll have to look at it and more or less give it a tick and ensure that all is well and good. Let's listen to what the Finance Minister, Kenneth Friata, had to say in his interaction with my colleague George Rafe.
I think the President's commitment was unequivocal, and as you have known, we have followed those instructions in the past 2 years. The Fiscal Council rule, as you know, is there, and the Fiscal Council Advisory Group is also there. The EPCC that we've set up by the Ministry is also further proof of what we want to do. Yeah, I think really, you recall he also mentioned the Social Partnership Agreement with Labour, TUC and Employers Association. So we really are putting in the buffers to ensure that we are disciplined in the way forward, because we cannot in any way compromise where we are. And I think it's a great future, and it's our responsibility to protect it.
So you say that your real test is election year?
That has been so. We had a dinner last night with the IMF, and the senior minister was there because he's the one minister who in 2004 ensured that we did not overspend. And I think it's that same culture of discipline that we would exhibit next year.
There were a bit about certain laws that needs to be passed as well. The IMF team was talking about that. Are we going to see some of these laws being passed, the PFM and all those things, to ensure that?
I think those will all go through, and they need to go through before the IMF board meeting in March. And this is state interest in governance agencies and the PFM Act, and they will all be done. We are looking for, and then the Exemptions Act, which the President mentioned.
Yeah, and I thought that was a very interesting one as well, that how that is draining the economy in terms of the exemptions.
It is. I mean, so far, I think you mentioned it's close over 2% of GDP, and that's a leakage that we cannot afford to sustain. So we'll cut it out.
Right. So that was the Finance Minister, Kenneth Friata, in a discussion with my colleague George Rafe. And the issue at hand was the International Monetary Fund's program with Ghana. I mean, it's a Ghana program, but it's supported by the International Monetary Fund through their extended credit facility, where over the course of 3 years, 2015 till now, a total of $918 million will be dispersed to Ghana to help with our balance of payment stability and add some policy credibility or some credibility to our policies. The IMF has been here since 1957, when we became members, somewhere in September 20th, I think. And we've had a very on and off relationship with them, 17 arrangements. And I was saying that UK has also had arrangements with the IMF. If you look at Nigeria, for example, they became members in 1961. However, they've had a total of 4 to 6 arrangements. A country like Venezuela, only 3 arrangements. So 17, you ask yourself, what's going on in Ghana? Anyway, but as Nana, as we come to the end of our discussion, the IMF obviously is an important part of global development. I mean, as a Bretton Woods institution, post the World War and all other things, to bring stability in exchange rates, and then now they've added a bit more to their mandate in terms of that. We saw the economic recovery programs, social adjustment programs in the 80s and all that. SETECPA has been advancing an argument from old, as far back as 2017, that post this economic credit facility program, we should sign on to the policy support instrument. And the IMF in Ghana, I mean, you play in the banking space, all right, but you have your eye on all of these things, the economy whatsoever. We've said it initially in the discussion. What must we do as a people to ensure that in the next 2 years, 2020 and beyond, we don't have this relationship where they come and impose, I'm using impose advisedly, because some argue that it's an imposition, but this is more or less your government signing up to it. What should we do to ensure that, you know what, all is well and good and we can manage everything ourselves?
Whatever we do, one cardinal point that we got to stick to is discipline. Most of the problems have come about because of indiscipline. Because if you are living beyond your means and you are not cutting your coat according to the size of your cloth, then you end up being in an overspent position where you are living on borrowed money. And I think in all the instances that we've called them, that was what had happened. And we thought that when we got the debt relief, that was going to be the end, that we were going to call them. We didn't do that. Recently, the president of the IMF, who is Christine Lagarde, yes, gave advice, and it was very good advice that, look, the developing economies, when you've got to take a consultant to look at issues, use your local consultants, because you take these foreign consultants, they come in and they now have to learn from your people before they can deliver. So what is the point? You know, I mean, similar to what presently we're doing in the banking sector, where the corporate governance directive that the governor at the Bank of Ghana has issued calls for a certification program for board of director members. You know, it's being done locally at National Banking College. Okay, some of the banks are arguing, oh no, we go to do ours in Dubai. No. I mean, to go and do a corporate governance issue in Dubai, well, are they now going to learn the Ghanaian culture, you know, before they do it? So I think we should stick to some of those advice that let us use local knowledge for these things where they are available. Where they are not available, yes, I'm more in favor. And that's why in the president's SONA, he mentioned the return home issue, where the main plank is, you know, buy Ghana, wear Ghana, travel Ghana, to celebrate the 400-year journey to the finding of the USA. Okay. So I think, you know, what we need to do is to keep ourselves disciplined, and it should be okay. Yeah.
Nana, final words. Do this for me in 1 minute. You're a banking man through and through. We've seen the reforms in the mainstream commercial banking from 36 in 2017 right down to 23 as we speak today. Hints of the savings and loan sector is next. Yeah. Just give us your brief take on that.
Well, in terms of figures, we had 37 savings and loans. Now they are 38 because GN was reclassified. Then we've got 22 finance houses, because the two are going to be taken together. Okay. So, you know, we're going to have 60 to deal with. I think we'll be lucky if we end up with a figure more than 50% of that. Okay. But some of them, this time around, the Bank of Ghana is going to deal with it probably in a different way from where he dealt with the universal banks. But they will be asking some to merge, you know, if they want to survive, because those who are beyond a rescue, there won't be any option than to merge. And there, the problems are not as bad as we had because the figures are smaller. Okay. So when you take the 5 groups in the deposit-taking institution, the banks account for about 80%, and the remainder 20%. Okay. So therefore, they may get 1 or 2 outliners, but generally it's not as bad as it will be. But the numbers will have to come down maybe to 50%.
Okay. And I thank you very, very much. So this has been the business edition of PM Express. We focus on the state of our economy, dropping out from the State of the Nation address. We've talked about the mortgage market, we've talked about banking, general economic performance, and the savings and loan sector. Yes, we had to quickly chip that in. The president didn't mention it, but of course, we had to do that. I thank you for your time, and I thank my guest, Nana Otoe Champon. He's a banking consultant, and my name is Philip Nanfuri. Have a good evening.